All right, guys, welcome to Trading Academy day 35. Wow, I can't believe we're on the day 35. Now, we're going to start getting into some more advanced concepts. This isn't really too advanced, but I'm going to start, putting on the last thumbnail, right? It's like a red thumbnail, but as you guys notice, I don't have my camera on. I didn't really feel like throwing it on, but again, if you guys want the camera on, I could throw it on in the next video, but I just didn't really feel like throwing it on today. But in today's video, we're going to be talking about the new week opening gap, or NWOG, and the NDOG, the new day opening gap. Now, what are these, right? Now, the new week opening gap can be used as a point of interest or PD array, right? As I like to call it, PD array is just a point of interest. It's just what you call a fair value gap, an order block, rejection block. You just group those up and it's called a PD array. Okay, that's all it is, right? A premium and discount array. Now, the NWOG can be used as again, PD array, right? It can be used as a magnet. It's where price can retrace to during the week, and the new daily opening gap is basically the same thing. Now, the new week opening gap consists of Friday's closing price and Sunday's opening price, as the new day opening gap consists of the previous day's closing price at whatever it is, 4:55 p.m. Eastern Standard Time to 6 p.m. the new day opening, right? The new day opening price. And I'll show you guys the examples here in a little bit, but that's what these two consist of, right? The NWOG is more important than the NDOG because that is going to be, again, Friday's closing price and Sunday's opening price. And all week, price can use the new week opening gap as sort of support and resistance. So I'll show you guys what I mean here with like two different weeks. And actually, it's going to be working out perfect because this last week we just went sideways. So in like weeks like this, you want to use the new daily opening gaps a little more. As you guys can see, I have this indicator here that just marks out the new week opening gap and the new daily opening gaps, because personally I don't really mark them out. I kind of just know where they're at just because I'm using this ICT everything indicator. Splits the days up for me pretty nice, as you guys can see here. If you guys want that, it's called ICT everything by Cold Brew Rush. Completely free indicator. You guys can throw it on. And you guys can copy my settings here. But yeah, it's a really good indicator. And this new week opening gap and new daily opening gap indicator is called NWOG NDOG by Crypto Night. So you guys can get this indicator as well. If you guys don't want to, mark out your new week opening gaps and new daily opening gaps, you guys don't have to. It has a lot of options here, and you guys can just flip it on if you guys don't, you don't want to throw this on, or you don't want to mark them out manually like me. I don't really like marking them out manually because my chart gets a little messy, so I don't really like doing that. So yeah, I just throw this on whenever I want to see it. And again, I kind of know where it's at because I just have a lot of experience, so I know where the new day opening gaps and shit are. So yeah, so for example, like I said, it's going to be the last candle for Friday, right? It's going to be 4:45 or whatever the time is. I think it's 4:45 when the market closes on Friday. So it's going to be the closing price of the last candle on Friday, right? Let me go to the 1 hour real quick. It's going to be the closing price on Friday and then the opening price on Sunday. Okay. That's going to be your new week opening gap. Okay. So if I take the closing price of Friday here and then the opening price and you just drag that out, that is going to be your new week opening gap. And as you guys can see, this shit gets messy. That's why I just threw on an indicator, because I toggle it on and on whenever I need to see where it's at. Again, I can see it where the new week opening gap is because of the weekly opening price that this ICT indicator has. So I know where the NWOG is at all times. But the new week opening gap, again, can act as sort of support and resistance throughout the whole week. Price can retrace back into it and be used as support or resistance, right? If I go to the 15-minute here, the new week opening gap over here was being used as resistance, and it flipped it as support, right? Taps the 50% of the new week opening gap and then starts going on for the whole week. And in weeks like this, where we don't have a lot of high impact news like we did last week like this, we didn't really have a whole bunch of high impact news except Thursday and Friday. You'd want to ideally use the new daily opening gaps, which consist of the previous day closing price and the new day opening price. So for example, it would be this price right here, the one that closes right there, the last candle, right? The closing price of the previous day, which is at 4:45, and then the new opening price of the new day, right? Which is at 6 p.m. Eastern Standard Time. That's when the new daily candle opens. So that opening price combined with the closing price of the previous day, right? It's the same day, but like the new daily candle opens at 6 p.m. Eastern every single day. And I briefly mentioned this in the daily bias video where, you want to look for, if you're bullish, at least if you expect, your higher time frame draw and liquidity to be higher, you want to look for longs below 1800, right? Which is 6 p.m. Eastern and midnight opening price. So this vertical line here is midnight. It marks the midnight candle. So that opening price and then the 1800 opening price. If you're below that, you want to look for longs, ideally if you're bullish. And it works out really, really well. But in weeks where you don't have a lot of high impact news like last week, you want to ideally use the new daily opening gaps, which is, again, I'm going to repeat myself again and again and again until you guys really understand it. It's the previous day closing price, the last candle, the closing price of the last candle. It's not all the way up here. It's the last candle before the day closes for an hour, right? Because we take like an hour and 15 minutes off before the new daily candle opens. Okay, as you guys can see here, if you look down here, this is 16:45, which translates to 4:45 p.m. in Eastern Standard Time. You hover it over here, that's 6 p.m., right? That's an hour and 15 minutes of, I guess, intervention, or of where there's no price happening because markets close for futures. So this is where the new daily opening price occurs, right? Closing price and then opening price. And as you guys can see, it's being used as resistance, resistance, resistance. No body candle closures above it. Comes up, sweeps liquidity, goes right back down. Again, if you're bullish, this is where you want to start looking for longs. There's an S&T divergence right here. And look what price does after, right? Pushes up, uses the new daily opening gap as support, and then pushes up higher, comes back again, uses it as support, right? And then again, next day, right? Closing price and then opening price. This is your new daily opening gap. You use that going into the next day, the next trading day, right? As you guys can see, support, 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 resistance, boom, down. It looks like it was going down to the new week opening gap, but it never reached it, and then pushed up. And then again, new daily opening gap was, I don't know why this is not marked right here, but let's see. It was, let me go ahead and mark this out. It was right here. So closing price. Oh, I see why. It was super tiny. That's why. It was extremely tiny. But I'll go ahead and mark it out for you guys here. So the closing price was right here, and then the opening price was right here. So extremely, like I can't even drag this out, dude. It's like a super thin line. It's like non-existent because the closing price was the opening price of this candle. So it's basically, you could just put a line in like these situations like this. But yeah, as you guys can see, uses it as support, resistance, resistance, pushes up, resistance, boom, and then goes up. Again, same thing for Friday's trading day, right? Closing price of the previous day, opening price of the new day, uses it as a magnet or some sort of support and resistance, right? I'll go ahead and show you guys another week here before I let you guys go. So NWOG, again, new week opening gap. What is it? Friday's closing price and then Sunday's opening price. Again, when you have here's another tip. When you have a tight new week opening gap, it's usually a high probability spot to just depending if you're bearish or bullish, you can use it as support resistance. If you have a very wide one, a very big one, it's kind of less probable that, the week is going to draw to it. Just from what I've seen from my experience, But yeah, as you guys can see here, closing price of Friday, opening price of Sunday, right? 6 p.m. Eastern, 4:45 on Friday to 6 p.m. Eastern on Sunday. This is your new week opening gap. You drag that out. As you guys can see, Monday used it as support, and then Tuesday flipped it as resistance, and then we basically go way lower, attacking a bunch of sell side left from the previous week. And it's not marking out the new daily opening gaps over here, but as you guys see here, Friday came right back to it at the end of the week. But as you guys can see here, this can be used as a magnet, right? New week opening gaps can be used as a magnet. It's one of the most, I wouldn't say important PD arrays, but it definitely helps out starting out like on a Monday and then seeing how the week ends. Sometimes it'll go back down to it or up to it, just like this week here. It went right back up to it. It exploded through it. But you can use the new week opening gap as true support and true resistance because this is where the new week opens, right? It's a very sensitive spot. And I'll actually go ahead and link ICT's video and his explanation of the new week opening gap and how he uses it and how he teaches it. So that way you guys can go watch it. It'll be linked in the description below. But this is just how I view it. I pretty much view it as a magnet and as true support and resistance. Same thing with the new daily opening gaps. But again, I don't really use the new daily opening gaps like that as much, except on weeks where it's like consolidating and we don't have much high impact news. I like trading on news because price gets very volatile and you can get a lot of very clean moves on news. But when we have no high impact news like last week, you want to rely on the new daily opening gaps like this, right? And again, price can come down to the new weekly opening gap, but it's not necessary, right? But it can. You can use it as another PD array. In a sense, you can use it like a fair value gap, right? If it comes back into it, look for it to get a reaction and then look at the 50% point of the new week opening gaps, right? This already has it marked, this indicator, but Monday last week tapped it perfectly and then we started pushing up, right? We used the upper part of the new week opening gap as support and then we started going up. So again, new week opening gap in summary can be used as a magnet throughout the whole week for true support and resistance, and the new daily opening gaps can be used for intraday price action for true support and resistance as well. I would only use the new daily opening gaps intraday, meaning that you're just using it for that trading day and then you kind of just dismiss it for the next trading day and you use the new one if you want to use the new daily opening gaps. But they're very sensitive areas where price will react off of most of the time. And then you combine that with the fact that, are you in premium? Are you in discount? Are you using a fair value gap in premium and discount, etc.? Like we'll be explaining, or I'll be talking about a lot of different models and stuff that you guys can use the new week opening gap and new daily opening gap with. And we'll be talking about that this week. I'm going to be giving you guys a bunch of cookie cutter models that you guys can take and use for your trading, so you guys can get funded hopefully and stuff like that. So that's coming up this week. I'm very excited about that, and a bunch of other little topics I want to talk about, like discipline tomorrow. But yeah, that is pretty much the new week opening gap and new daily opening gap. Hope you guys enjoyed the video. I'll catch you guys in tomorrow's video for the new week. Peace out, guys.